And our focus now is a discussion on federal programs to help underwater mortgage holders. And our guest is Congressman Jim Jordan, Republican of Ohio. He serves on the House Committee on Oversight and Government Reform, and he's raised a lot of concerns about how the federal programs have been working so far. Congressman, tell us your concerns, and then we want to talk about the announcements from Bank of America and its upticking of involvement in this and how that affects the debate.
Look, the Special Inspector General has issued his report. This program doesn't work.
Which program? Tell our viewers.
Home Affordability Modification Program, HAMP is what we typically call it. If you read the Inspector General's report, I mean, he outlines all kinds of problems with this. But the biggest thing is, look, the folks you're trying to help aren't really getting helped in the process because, I mean, the Treasury made claims early on they were going to help 3 to 4 million homeowners stay in their homes. They made those claims a year ago when the program started. To date, 170,000 families is all that's been helped in this program. They use a metric to say that, well, if we're in a trial modification, somehow that counts as actually accomplishing and really helping these homeowners, when in fact, many of the folks who start in the trial modification never get to permanent status, never get the permanent help that they want. And even those who do get a permanent modification on their loan, the Treasury and the homeowner work with the bank, they get a modification on their loan. 40% of those are going to redefault later. And so the point that many of us have made on the committee is the families we're trying to help actually are being hurt by this process. They get this false hope that there's going to be help. They may even get their mortgage completely modified and then later redefault. They frankly would have been better off had they just went through the process and found other housing at a cheaper cost, at a cheaper price. And so
and turning the houses back over to the banks.
Yeah, I mean it's a tough situation all the way around, but they would have been better off in the long run having gone that versus this false hope that the government, the Treasury Department through this program has given these individuals and these families.
And what's the dollar amounts involved?
$75 billion of TARP money has been allotted to this program. Now, not all of it's out the door, obviously, because they're not helping near the families, near the individuals that they indicated they would. But $75 billion commitment of taxpayer dollars in a program that everybody understands is not working and frankly is harming the very Americans, the very families it's designed to help. One great example of why the federal government shouldn't be involved in these things, why we are much better off letting the marketplace work, letting individuals working with the banks work out these situations versus having big federal government come in with all their arrogance and supposed all their expertise. Much better off going with a market approach.
So what do you make of the announcement by Bank of America? All of the news stories suggest that the stick applied to them was pressure from Massachusetts prosecutors. And here's an example, the lead on the Wall Street Journal story. Under pressure by Massachusetts prosecutors, Bank of America Corporation said Wednesday it would reduce mortgage loan balances by as much as 30% for thousands of troubled borrowers in what could presage a wider government effort to encourage banks to offer debt reduction to ease the mortgage crisis.
Well, I mean, look, the federal government's coming in, as the federal government does, and telling these banks how to operate. That's scary in and of itself. I mean, some of the things we've seen in America the last year, the fact that we got a federal government pay-czar telling private American citizens how much money they can make. Now we have the federal government coming in telling banks, you've got this contract with someone who's you're providing a mortgage to, you're going to have to redo that. Scary things. And maybe, I mean, I disagree with that approach, but maybe you could say there's some benefit if, in fact, the homeowners were getting a benefit. But as this program points out, the HAMP program points out, when, in fact, they get them modified, many times they redefault later. Probably one of the reasons banks are reluctant to start down this road in the first place. And you're actually causing more harm to the very individuals, the very families you're trying to help. So, again, I would much prefer a market-oriented approach and certainly not prefer the government coming in the heavy-handed way that they do, telling banks you have to do these things. I think, frankly, and I know our discussion is on banks, but frankly, this is a forerunner of, I think, what we can expect in this health care. We know with the announcement last week that this bill that passed, potentially 16,000 more IRS agents can be out there making sure that Americans have purchased health care, and if you haven't, you can be fined and potentially face jail time. So there are real problems when you have, particularly the federal government, with all its heavy-handedness coming in and telling telling private American citizens how they have to behave.
Back to the way to approach the mortgage crisis, it suggests, and when you read that there's a central debate about what will be good for the long term, about reducing payments versus reducing the principal balance. Because, here's an example, banks and policymakers have long worried that reducing loan balances for some could spur others to default in hopes of a similar deal. Response to that?
All kinds of problems. Exactly right. Once the government starts getting in and interfering in the marketplace, you think you're solving problem A, and what you end up doing is creating problem B that you never anticipated. There are always those concerns. That's why you're much better off, as I've said before, much better off letting the market work this out. Much better off, frankly, letting the servicer, the bank, work with the homeowner and figure out if there is actually a way they can keep them in the home. Banks don't want to foreclose unless they absolutely have to. They would like to keep that customer in that property, like to make, work it out so that they can continue to make payments, because right now it's tough. We saw the numbers yesterday. Home sales are down for the month of February, so it's tough to take those properties that they might have to foreclose on and then try and find another buyer for. So you would much rather have that be the approach than what we have seen from this program. And again, you don't have to take Republicans' words for it. Take the Special Inspector General, who's talked about the inefficiency of this program, how it hasn't worked, and the metrics that the Treasury has used aren't really the proper metrics to measure if there's any type of success.
Ohio has been one of the hardest hit states in home foreclosures. When people talk to you that are facing these kinds of problems with their mortgages, what do they tell you that they need and want?
The biggest thing they need is an economy that's growing. And this is another problem I see out there. We're spending so much time delving in and interfering in the marketplace. What we should be doing as policymakers is setting a framework where economic growth can take place and real job opportunities can occur in Ohio and frankly around the country. Instead, we're spending time on big government takeovers of health care, big government interference in the mortgage sector, big government interference in the student loan sector. You name an industry in an area of the economy, big government's getting involved in that. Instead, we should be setting a framework, getting our budget under control, getting our deficits and debt under control, and frankly keeping the tax burden low on the small business owners who create the vast majority of jobs in our economy. That's where we need to be focused. Instead, you're seeing us focus on all these other areas.
The Wall Street Journal's article, written by James Haggerty and Nick Timiraos, says the Obama administration is now discussing with banks how to adjust its existing loan modification program to encourage forgiveness of the principal. People familiar with the matter say an official declined to discuss such efforts, but said the administration was encouraged by Bank of America's initiative, calling it consistent with our own housing policy principles.
I like the terms using there, discussing with banks. When the federal government comes out into a private enterprise and says we want to discuss something with you, the private entity understands this is the federal government, the regulatory body, the law coming out. It's not really a discussion; it's more intimidation. And this same entity, Bank of America, we had hearings earlier this year where Ken Lewis, former CEO of that institution, indicated that the Treasury Secretary and the Federal Reserve Chairman told him if he didn't go through with the merger with Merrill Lynch, he and his board could potentially lose their jobs. I mean, so whenever you have the government coming in discussing things, I think that's an interesting term. You know, this is the heavy hand of the federal government coming in and trying to tell you how you're going to have to do things different now. And I think it's a scary direction to go in this country.
But of course, in the case of the big banks, many of them have lots of government money invested in them now.
I understand that. Initially, Bank of America was not one who wanted to take the TARP money. We heard that in testimony. But I understand those institutions that have, there comes some additional involvement from the government when, in fact, you've accepted taxpayer money. But many of the banks who made loans to, most banks who made loans to homeowners out there didn't take the TARP money, and yet they could potentially face the same type of activity from the government.
So before we go to calls, and we've been putting the phone number on the screen, you've criticized the program, the cost, and the ultimate help that you say it's not giving to the homeowners that it's intended to. What are your suggestions for what should be done policy-wise?
We should never start down this road. I mean, look.
Well, where do we go from where we are right now?
Well, I think we should begin to scale it back and move out of this program. It obviously hasn't worked. It's hurt the very people it's supposed to help. It's a cost to the taxpayers of potentially $75 billion. It seems to me when in the private sector, if there was something that colossal of a failure, you would back away from it and you'd say, all right, we got to stop doing this. But somehow in government, when a program fails, the answer always from government is, well, we need to do more of it and continue to fail, and then we need to do more of it and continue. and waste more taxpayer dollars, harm more families, give more families false hope. We should pull back, and frankly, we never should have started. If big government solutions were going to get us out of this mess, well, for goodness sakes, we've been out of it a long time ago, because that's all we've been spending taxpayer dollars and the heavy hand of the federal government coming in, getting involved in all kinds of activities it was never intended to do.
Let me show you one of the charts that goes along with this story, just to give you a sense of the big banks and how many loan modifications they've made percentage-wise. Bank of America has so far modified 24% of those eligible. J.P. Morgan Chase, of delinquent loans, 39% of those eligible. Wells Fargo, 37%, and Citi Mortgage, 52%. They're the highest of the group. We're talking about the HAMP program, which is the homeowner mortgage modification program paid for out of the TARP monies. You've heard the cost of it. You've heard some of the congressman's concerns. Let's go to your telephone calls. We're going to begin with a call from Webster, Wisconsin. This is Robert on our Democrats line. Good morning, Robert.
Good morning. I just want to make a...
Robert, you there?
Yeah, I'm here.
Speak up, please.
I just want to make a quick statement. With the Republican Party, we don't need to worry about the terrorists coming over here. The Republican Party is already the terrorist.
Well, why do you say that, Robert? That's strong language.
Because it's true.
Well, what's an example? I mean, you're just making a blanket case here. What's an example?
No. That's just exactly what the terrorists want them to do.
Robert, let me make two pieces of information that came out last Friday. Now, this is relative to the health care legislation, but I think it sheds light on this issue of the federal government getting so involved in the private sector. The first was Caterpillar. Susan asked earlier, what should we be doing? And I said, we should be creating an environment where economic growth can take place and people have jobs. If you have a job, it's much easier to make your mortgage payment and stay in your home versus having the federal government come in and tell banks you have to redo things. Caterpillar announced last Friday that the health care legislation that passed over the weekend will cost them just next year $100 million more to provide health care to their employees because of all the regulations, all the mandates, and frankly all the taxes that are in this health care legislation. The other piece of information that I think, again, provides a context for evaluating this program is the ranking member on the House Ways and Means Committee indicated that the IRS could, in fact, may in fact hire 16,000 more IRS agents to enforce the individual mandate that's in the health care legislation. So instead of doing the things that are going to foster economic growth, what we're doing is creating policies that make it more difficult for employers to provide jobs and to hire additional people. And frankly, add the one area we are creating jobs is potentially the federal government, more bureaucrats to go out and enforce these regulatory policies.
For Congressman Jordan, next Steve, Republican in Anaheim, California. Good morning, Steve.
Good morning very much. Can you hear me?
Yes, we can.
Okay. My question is basically that I think the housing bubble was basically why it's still high is because of the price of the houses themselves. Everybody's afraid the gas is going to go up to $5 a gallon, so you're not going to see anybody run out and buy a house right away that's selling for like $500,000 at a 17% interest. Not only that, I'm kind of curious in why the Republicans yesterday in the Senate shut down all the committees, especially on ones that was actually hearing this issue. Thank you.
Well, my guess is the reason the committees were shut down is because of the huge debate on the health care legislation.
That's right.
The so-called trailer bill or reconciliation bill that they're working on in the Senate. So that's sort of absorbed the entire focus of the Senate.
Let's go back to more detail about the Bank of America. The New York Times story had this paragraph that caught my attention. As the housing market shows signs of possibly entering another downturn, worries about foreclosure are growing. With the volume of sales falling, prices are sliding again, and when the gap increases between the size of a mortgage and that value that the home could fetch in a sale, owners tend to give up. What are the pressures on the marketplace that people are suggesting that there could be another downturn? Well,
we saw that in the numbers last month. The home sales were down. I believe it was a little over 2%. And you're right, when that happens and prices come down, you do get some homes that are, quote, underwater. And that is a difficult situation. Again, I come back to the fundamentals. The solution to all this is an economy that's growing, is job opportunities that are out there for people, and not loss of jobs, but actually job creation. In order to have that happen, I think the federal government's got to do some fundamentally different things. First and foremost, we've got to quit spending like crazy. The deficits and the debt that we're building up sends a terrible message to the economy. The other thing I would point out, too, is I think many business owners out there are very nervous about what's coming next out of Washington. And all the uncertainty is making it more difficult for them to take the risks they would typically take as we start to move out of a recession, as we start to come out of it. I always tell folks, remember, business people are smart people. They take educated risks. They don't take crazy risks. And maybe that expansion they were thinking about doing that they put on hold a couple years ago, or those people they had to let go who they'd like to bring back and they would typically do as they start to see things improve, they're putting all that on hold because they don't know what the crazy politicians are going to do next. Are we, in fact, going to do some cap-and-trade proposal that will raise their energy costs? Are we going to continue to raise taxes like they did last weekend in the health care bill? And all that uncertainty, all those potential concerns they see from their government are causing many business owners, in my judgment, not to do the things that we'd like to see happen, and frankly, not to do the things that they would typically do because they're just nervous about what are these yahoos in Washington going to do next? And I think that, more than anything, is hurting the situation and leading to the very numbers you just pointed out there, in that home sales are down and some people may, in fact, be underwater on their mortgage.
For the Congressman next, Ray, independent in Brick Township, New Jersey. Good morning, Ray.
Good morning. How are you?
Very well,
I hope
thanks.
I can keep my composure after hearing all this rhetoric. By the way, Congressman, can I ask you a real quick question first? Have you studied this subject? Have you actually viewed the House of Cards presentation of American Greed by CNBC? Have you read the book?
I have not seen that,
And
no.
then the roof caved in. Do you know who David Ferber is, by the way?
Do not know that name.
Okay, good. Well, he happens to be one of the financial analysts on CNBC.
Okay.
And if you would have done your homework, you would have realized that the majority of what you're talking about, we're talking about subprimes, which now affect the world, and we're on a rocket ship ride to fiscal hell. The majority of it comes about because of the fraudulent undertaking by Wall Street, the $500 million per month of subprimes that were sent abroad, that were put together
Package,
as
yeah.
packages
Understand.
that came back to haunt everybody. And quite frankly, when somebody says, "Oh, it's all one party,"
I didn't
such
say. I
as-
don't think I said that at all this morning.
you've implied it. Come on.
All I've
And
said
you
is that
jumped in- excuse
that
me a
big
second.
government
Let me
solutions aren't
finish
going to
and
get
then
us
you
out of
can
the mess.
Okay?
Yeah, go ahead.
Let's use a little professionalism here. The fact of the matter is, it turns out that there is no question that you are culpable, and the Republicans, just like the Democrats. There's no question at all about that. How many people have gone to jail so far for this,
Yeah.
for the subprime? Any? Where's the SEC heads that sat and let all this happen? Where are the stamping of the AAA bond rating agency heads? Are they still around collecting their millions?
Yeah.
How
No,
about the Wall
look,
Street billions?
I think those are all good points, and I was one of those members who was not in favor of bailing out Wall Street. Actually, voted against the TARP legislation, and I agree with a lot of the points. Where was the SEC looking at some of the things that were going on? This packaging of these mortgages and these mortgage-backed securities, and then being sold, and some of those loans that were put in those packages were in fact bad loans. No documentation loans, subprime. I mean, so there were a host of problems. The problem is, though, when we take taxpayer money and come in and bail these folks out, I think we exacerbate the problem and we don't ever get to the heart of the issue. So I would agree with a lot of what you're saying. Well, look, I mean, there are times when we can work together. I've worked with colleagues on the other side of the aisle, co-sponsored legislation with Democrat colleagues. But on the bill that they brought forward on health care, it just fundamentally disagree with the big government approach they're taking, with all the tax increases in the bill and everything else. It's just a fundamental disagreement. So on those things you can't. I would argue, and I would go back to, I think there was an opportunity this Congress to actually have some bipartisan work done early on, and that was with the stimulus package that was done a little over a year ago. If the majority would have come in with the right kind of tax cuts and focused on things that we actually think would foster economic growth, I think you could have got bipartisan support for a true piece of legislation that would truly foster economic growth. but instead you got a partisan big government spending approach. And I think that unfortunately set the tone for this entire Congress, and we've seen it play out now for over the last year.
Bringing us back full circle to the HAMP program, which is what we started our discussion about. And here's the Mortgages in Crisis from USA Today. Are your criticisms going to be addressed and discussed? Is there a bipartisan concern over how the program is?
The hearing today at 10 o'clock, we've had in the subcommittee, chairman of the committee is Representative Kucinich, and I'm the ranking member. We've had several hearings on this, bipartisan criticism of this program. I think you're going to see the same thing today in the full committee from Chairman Towns and from ranking member Issa and up and down the line. Both sides understand. So again, this is a bipartisan effort in trying to address concerns with this program. You're going to see that full scale today at 10 o'clock in our hearing.
Thank you for being here this morning
Thank
and
you,
taking
Susan.
our viewers' calls.